Thank you for tuning in to another edition of the Vulcan Report. Alright, this report is going to be for December the 3rd, 2013. Right now you're looking at a chart of the E-mini S&P 500 futures contract. And as you can see, the analysis warning of a correction did come true for Monday's trading. And we came off of the locked-in bullish momentum within the up bull trend. And you can see here the down candle. We expect further downside prices within the next 3 to 5 days, as we now have a downtrend channel, negative swing VIX starting. Last time we got it was here, but it was already coming off. Now we have it here at the high, so we should see a nice significant pullback now. I will be honest. Yesterday's analysis, I was uncertain if we were going to get triggered on that sell signal. I really anticipated getting filled on the top side, but not necessarily on the downside. And lo and behold, if you took the S&P trade, you would have been stopped out on both sides had you taken that trade. But what would have happened is your long would have been triggered, and then you would have been triggered short and got stopped out of that long, and then you would have made a few points on the downside, or possibly still be holding that short position going into Tuesday's trading. So sometimes that happens where you're trading with the trend, you're taking the longs, but then you get triggered on your shorts, and that long gets stopped out, and then you reverse like you did here on the 15th of November. Your long signal would have got triggered, and your short trigger would have been triggered also. So the long first would have got hit, then it would have reversed and got you into the market a few days early, and you would have caught the nice reversal there. Okay, so that's kind of how the system works. We use tight money management stops, and those stops do ebb and flow with momentum and volatility in the market, and that's just how we roll. That's what we do. It is what it is in that regard. And we have to do it that way because you have to not only give the markets room to ebb and flow and do what they're going to do, but you also excuse me, always want to be, trading with the overall trends as well. So that's just how that goes. So for Tuesday's trading on the S&P 500, we're looking at long at 1809 3/4, short at 1796 1/4, playing the continuation downside movement. And our initial target for the move is going to be 1776. So it should be a nice pickup as we test this trendline support here. I'll come pretty close to it. Okay, taking a look at the Nasdaq. The Nasdaq came off too, but not like the S&P and the Dow did. But we did get this nice black warning candle here. So the Nasdaq could accelerate on Tuesday to the downside really nicely. And so we're going to be looking for that to happen and see what kind of momentum we can get. We're still technically locked in on the bullish side, but that might be starting to come off on Tuesday. We'll have to wait and see. Usually the indices like to move together. Sometimes one index will be stronger than another, but overall they're still moving in the same direction. Sometimes the Nasdaq takes leadership, other times the Russell will take leadership, sometimes the Dow or S&P may actually take leadership. So it just depends, but overall they're still moving in the same direction. So just be mindful of that as we move forward. All right, so the initial target on the Nasdaq is going to be the 34.28 level. That's a nice move down, and that's this trend line support here. So for Tuesday, long at 34.89, short at 34.75 half. Okay, taking a look at the Russell. The Russell looks a lot more prominent to the downside, and technically speaking, it's already testing the 11.24.10 level, which is its trend line support here. All right, and you can see it bounced off of that. It spiked down. It didn't close there. It spiked. So we'll see if it can gather enough momentum to bounce from there on Tuesday. I doubt it. I think we're just going to pick up and start to accelerate down here. And I think that the next stop for the Russell is going to be at the 11.20. Should be a soft support, and then a major support at 11.10. Alright, so that's why I see this one going. So keep a lookout for that Russell. With that said, we have intraday buy trigger at 11.34.70, sell trigger at 11.25.10. Alright, now looking at the Dow looks just like the Russell. You can see on Monday we got that, on Monday's close, we got that black warning candle. I'm sorry, that would have been the 29th. And then you see Monday we followed through. Last time we did this was on the 19th of November, and then we followed through. This one looks more prominent, showing signs of continuation to the downside that we haven't supported yet. I see you first supported this red line, and then trend line support here, the black line. So that should take us to the I want to say the, what's this, 15,986, and then here is going to be 15,731. all right, so from the 900s to 731 is going to be your range on initial target for the downside to the Dow. Playing it for Tuesday will be long at 1643, short at 15,964. All right, taking a look now at the crude oil situation. All right, we are in the volatility bands again, so we're sideways consolidated, but we're still within a downtrend channel, even though we stopped hitting new lows, but the negative momentum is still locked in, and the volatility band is starting to point down, signifying that more downside pressure is building in this market. It's going to be really hard for the crude oil to rally from here. So again, once again, taking a look at what we're going to do for Tuesday. Long at 94.15, short at 93.32. Basically, if you didn't take any profit off the table yesterday, you're trailing that long position with that with today's short trigger at 93.32. That's where you're going to stop and reverse. If that 93.32 is hit, that's where you're going to look to get short and watch it drop to 91.67 and crash below that and keep going as it heads toward that $88 handle. All right, taking a look now at gold. You see this nice downward bar here, even though it's happening on an uptrend channel, a weak uptrend channel, because it's not hitting any new highs. We did start the beginning of another down leg in the gold. We are negative pulse waving. We're trading below the resistance trend line, resistance area. We've been kind of bouncing and testing and hitting our head on it, and then we just drop lower. So I see much more downside in this gold as we head toward that 1150 price target I told you. So today I'm issuing a crash alert for the gold, an official crash alert, saying that this thing we could have a $100 down day on Tuesday easily. Okay, please be alert and be aware of that. For Tuesday's trading, you'll play the reversal. If we get a technical bounce, you're going to get long at 12:34.10. Playing the continuation downside crash alert, you're going to get short at 12:15.30. Alright, here is the silver. As you can see, our analysis has been spot on with the silver. It's moving exactly like we said. It's about to hit the $18 handle. Alright, that's this pulse wave from June of this year. Okay, that's where we're headed now. The $18 support area. We're moving closer to it. This is a this is a tough one. I'm gonna give you my technical stuff first. As you can see, we have a beginning of a negative momentum downtrend. We are still bearish. Here's a little bear. Alright, we are negative pulse wave and we're trading below the trend line resistance. Alright, now here's what you need to know. Just like we issued a crash alert in the gold, for this trading session, what happened on December 2nd is that a dark cloud occurred, which indicates that prices moved up strongly on the previous bar, which they did, opened higher, but then closed significantly lower. Okay, this implies weakness as the momentum appears to be shifting from the bulls to the bears. Note that the lower of the close of the black candle relative to the white candle or uptrend bar, alright, the more bearish the dark cloud pattern. As you can see, the length of this bar versus the prior bar where we closed up. Okay, now we also have an engulfing bearish line where a black candle's real body completely contains the previous white candle's real body, or in other words, the down bar engulfs the prior day's up bar. Okay, which you have here. Okay, and this pattern is bearish. Excuse me. The engulfing bearish pattern is bearish during an uptrend, and it then signifies that the momentum may be shifting from the bulls to the bears. And we did try to gain some positive momentum, hence the blue bars. Okay, we tried to get a positive uptrend channel, but just couldn't make it work. Okay, if the engulfing bearish pattern occurs during a downtrend, which is the case here, it may be a last engulfing bottom, which indicates a bullish reversal. The test to see if this is the case is if the next candle closes above the bottom of the current down candle's real body. So Tuesday is going to be a really big day to see if this is a washout bottom and we're going to reverse strongly from here, or if we're going to continue to crash down. So Tuesday is going to be a very important day in the markets. Okay, so keep your eyes and ears open, and here's how we're going to play this one. Alright, for Tuesday in the silver, playing off that reversal long at 1955, playing the continuation downside short at 1905. As you can see, for the past several weeks, our analysis has been spot on. Remember, take what you can and give nothing back.